Okay, well, we just got some news on the housing market in this country. Home sales in Canada rising for a second straight month, perhaps reflecting a boost in buyer confidence as the economy hangs in, even though there is this trade uncertainty. There is another part of the story, too, which we talk about all the time, which is affordability, which is something that's being measured in a new report from Royal LePage as well. Phil Soper is the president and CEO of Royal LePage, and he joins us here in studio. It's good to see you.
Good to be back.
Okay, so let's just start with the headline numbers that are coming from the Canadian Real Estate Association, which it would appear that there's at least enough buyer confidence in there that you can see a decent amount of buying action. What was your general take on the mood of the markets from that lens?
It's all Ontario.
Okay.
So Ontario's been a laggard. If you look at the latest house price comps for Royal LePage, which I know we're here to talk about to a certain degree, 60% of the 64 cities rose on a year-over-year basis. Toronto, on a year-over-year basis, was down. But if you look at a quarter-over-quarter basis, the reverse was true. The last 6 weeks have been particularly strong in the Golden Horseshoe area, and it's being reflected in numbers. It's our biggest market.
And I believe the total number of homes that are on the market across the country is still much higher, like more than 10% above where it would have been, call it, in June of last year. So there's choice out there, I would guess, for people who do want to buy.
If you look at recoveries from the financial crisis, from the implementation of the national stress test, these big recoveries, one of the things that really hurts the market is people back off and they don't list their homes. The demand comes back and the inventory isn't there, and you get this uncomfortable housing inflation. It's not even. This time, we have lots of inventory. It's enough to take a surge in demand and not have a surge in home prices. So we're not expecting any spike in home prices.
So against that backdrop, like the report that you guys just did for the second quarter suggested that overall affordability improved.
Yeah.
So is that one of the considerations, just that there's a reasonable amount of supply out there so people have a little bit more choice?
Sure. Depending on the quarter, if you look over the last 3 years, wages and salaries have been somewhere between 50% and 100%, or double the long-term norm, up to, say, 4% right across the economy. Whereas if you go back over the last 3 years, home prices are off, in aggregate, maybe 11% in total. So we've had home prices declining, the cost of borrowing declining, and wages and salaries stronger than typical. It's an affordability window that we haven't seen in the country since, well, the mid-90s.
And so I guess at the end of the day, one of the considerations is where the economy lands, and it feels like the economists are feeling a bit more optimistic than they probably were just 3 months ago about what happens to Canada. And so if that makes the employment picture better than it might have been in a worst case scenario, that's obviously one of the biggest drivers with homes. Now, the fact that there is a reasonable amount of supply out there, I mean, the broader story we talk about is that there's, not enough supply in the market to really make a dent in affordability. Now, the new federal government's been talking a lot about sort of their action plan on this. What's been your assessment of what's been going on?
It's a three-tier problem: municipal, provincial, and federal. And honestly, the federal government's probably the minor player in that whole equation. You do see movement. Ontario's pretty good. Other provinces not as good, but it's glacial in its progress. And a slowdown like this does not help, because it takes a spotlight off a major social problem. But we'll be back talking about housing affordability again pretty soon.
And then in terms of overall pricing, like, what are your current estimates for where home prices go throughout the rest of this year?
So we're looking at 3.5% up year over year. We started the year looking at 6%. We revise it every quarter. 3 months ago, we took it down to 5%. and now we're taking it down to 3.5. That is a Vancouver, Toronto story. They just didn't show the pop in the spring we normally, and there's not enough time left in the year to get the whole thing rolling. But even in Toronto, we're expecting prices to be up 2% year over year by the end of the year.
Okay, so 3.5% sort of countrywide for the year with
all the products.
And Ontario and BC sort of having a bit of the heavier lift with that?
Really, BC's now the only laggard. So we're seeing Ontario come back into what you'd call normal recovery mode. We saw things flatten in June in Vancouver, but it is our slowest market now. It's also our most expensive market.
And then moving to Quebec real quickly before I let you go, because that was something that also stood out in your latest market update. What's going on in the province?
Really, for the fifth consecutive quarter, Quebec City leads the country in price appreciation, 11.5% year over year. We're into double digits, which probably would surprise most people in the country.
Yeah.
And it's based predominantly, well, I say two things. One, home prices are half of what they are in Toronto, in Montreal. The second thing is they're just not as inundated with American media. It's interesting. When you talk to people on the front lines, they just say it's not as much of a conversation as it is. They're not watching Fox News. So, I think that helps.
So anxiety through media consumption impacts
in a big way
the home purchase thinking of Canadians.
Absolutely. When you look at the fundamentals, there's no problems. When you look at attitudes, people see the sky falling, but less so.